Hello, everyone. Happy to speak with AtlasClear Holdings today. They trade on the New York Stock Exchange, ATCH. It's a technology-enabled financial services platform modernizing trading and banking infrastructure. The company calls 2025 a pivotal year, focused on rebuilding its foundation and restoring financial flexibility. In this episode, we highlight AtlasClear's year-end update and the strategic priorities driving the company into 2026. So it's a really interesting moment to be talking about fintech and financial infrastructure right now. The sector is certainly heating up. Regulations are starting to make more sense. Capital markets are settling down, and the focus is shifting back to platforms that can actually scale for institutions. So I'm so excited to dive in and hear how AtlasClear is approaching the next chapter and where they see real opportunities are ahead. So with all of that said, happy to welcome Executive Chairman John Schaible and President Craig Ridenhour. Nice to see you, gentlemen.
Nice to
Nice to
see
be with
you.
you again, Anna. Thank you very much.
All right, so I want to start with you, John. How would you describe Atlas Clear to someone who is brand new to the company? And then segue into what's changed the most over the past year as the fintech landscape has continued to evolve.
Well, in the simplest term, you referenced it so well at the beginning. We're building a platform for financial products, the trading, clearing, settlement, and distribution, really with a focus on new financial products. And so we're trying to build a company that can compete in the space that's been really overwhelmed by large firms more efficiently, perhaps faster, and in this very exciting regulatory environment with greater flexibility. And that really is for fintech what has changed the most. Since this administration has come in, it's been a remarkable turnabout in terms of regulatory processes and regulatory support. We really feel like the regulators are working with us to advance new products and to advance the economy. So we've got a very exciting window that we're looking forward to taking advantage of.
What a time to be in this industry. Craig, I want to ask you before we dive deeper into strategy. This is part of an ongoing conversation we're having with Atlas Clear, so we have lots to talk about. But why is staying engaged with investors and providing regular updates so important to you right now?
Thank you, Anna. It's a great question. We get this often. What we want to be is more present in the investing community. We spent a lot of time initially for the first year and a half, 2 years of our life, really getting the ship righted from a balance sheet perspective, from a process perspective, getting the right people in place to really begin to accelerate this growth that we see in front of us. But what that didn't afford us was the opportunity to really get out there and talk about the story. Now we've taken a more aggressive approach over the last 6, 9 months as far as getting out there, telling the story. Just what John just said, what do we actually do at Atlas Clear? But from an investment standpoint, the opportunity we see in front of us, and we think the tremendous opportunity in front of us. So it's critical for us right now because we're going into our growth curve and we've got the foundation laid to get out, to speak to the public, to speak to institutions, to research, whatever it may be, to get the word out on the opportunity we have in front of us and the platform we're building, which we do believe is going to be transformational. And so you will see us out there often. We'll be at conferences. We'll be doing interviews. We want to be present and we want to be in the public eye.
Thank you, Craig. Transparency is everything in today's world. So, John, back to you. Let's take a step back. Let's look at the broader fintech and capital markets landscape. So, talk about what trends, what shifts stand out to you right now, and what do you think the market may be underestimating?
I'm going to answer the last part of the question first, and I think what the market might be underestimating is how fast we should move now into a broad distribution of crypto. Crypto is very simply a better product, especially from a risk management perspective. It provides the regulators complete transparency on the right chains for AML, KYC, all of the things they want to see. It's all there in an immutable ledger. With what's happening in this administration and the public statements that they want the United States to become the crypto capital of the world, which obviously we chose not to be up until now, we're seeing from the regulatory authorities a real push to facilitate the entry into this market. And so I think that's going to happen a lot faster. And this is a product that I think will revolutionize almost every form of financial product because it reminds me a lot of when we made the shift from shouting at each other on floors to electronic trading. It was just an obviously better model. And that is what we're facing here. The distributed ledger technology is an obviously better way to clear and settle because it provides so much risk management. And the most simple way to think about that is actually the difference between trade and settlement, right? We've managed to crunch down to T+1 on most products, but really it should be T is the settlement, right? It should be instantaneous. And that is the ultimate promise of crypto. And I think that's going to happen faster now. I mean, it's been many, many years in the making, but I think we're at that acceleration and tipping point. And I think we're well positioned to take advantage of it as a company.
It's going to be interesting to watch the masses adopt it or resist it or adopt it out of choice or demand because they have to. Craig, I want to ask you, one thing we hear a lot about is the gap facing mid-sized firms that aren't priorities for large legacy providers, but they have clearly outgrown basic or patchwork solutions. So how do you see that challenge across the industry, and where does AtlasClear fit in with that?
Well, that's a great question. And we take that very seriously. We think we're in a really sweet spot, and unfortunately a sweet spot because so many of these institutions have in fact been orphaned in this marketplace. And by that, when you mentioned patchwork and how they've done things, if you're a smaller broker dealer, even a mid-sized broker dealer, your primary goal is what? To manage clients' assets. So you have to have a custodian that holds those assets and clears and settles transactions. You have to make sure that they are handled properly, efficiently, obviously with risk management. You have to have these tools available. And what's happened is the larger providers of clearing services don't want the smaller institutions. They'd rather clear for the larger financial institutions and face them. And that goes back to what John had previously said on risk management and balance sheet risk. For us, we look at AtlasClear differently. We look at our ability to come in, service the smaller institution space, provide them with world-class technology, with risk management tools, with the ways that they can actually properly manage their own clients' portfolios, creating efficiencies both from a margin perspective for themselves and a better product distribution for their actual clients, but then also the extension of credit, which they get barely none of right now. So we see the opportunity with our platform to come in, build it out robustly, and provide a clearing solution, a one-stop solution to these small institutions and medium-sized institutions that, again, going back to the original question, have been orphaned by the larger institutions out there, the larger clearings of the world. And not to single out Pershing and Fidelity, but they are much larger than us, and those are the ones that typically provide to the larger providers out there, larger broker-dealers and hedge funds. So we see a real opportunity. We think we've got a niche coming in, and we see a big opportunity over the next 3 to 5 years and beyond to really accelerate in that marketplace and then move on to the larger institutions and compete for that business as well.
Wonderful positioning. And with all that said, we've got to talk about Wilson Davis. And it's a huge part of how AtlasClear serves that underserved segment you mentioned. So how do you think about its role within the platform, and not just as a standalone business, but as the foundation you're building right now?
Sure. Another great follow-up question, Anna. When we look at Wilson Davis, we had to make some hard decisions at Wilson Davis in the first year to year and a half to get them properly positioned to, I think, really accelerate into this marketplace. We had to build the foundation, which we've done. Foundation was already there from a licensing set. Wilson Davis is a correspondent clearing firm. It's a full member at NSCC DTC. It had all of these levers, but the ones that weren't being utilized: margin lending, stock loan. You can go across a litany of things. We're now starting to move into those areas. So the foundational piece is there with Wilson Davis, and the licensing set is there. So right now, it's really our only revenue driver. We do still see it as being a core component for eons as we go forward, because as John mentioned, as crypto, as digital assets come to the forefront, with the licensing set we have with Wilson Davis and what it affords us on the securities clearing side, and some of the things coming down the line from a custody standpoint on tokenization and clearing of crypto assets and things like that, we already have a foot in the door, right? And so it is a foundational piece. It is a key component of our revenue driver right now, but it's a key component in our bigger strategy longer term when we ultimately get the opportunity, provided we have a successful acquisition of the bank in Wyoming, of that acquisition tying the two together with the license sets of both, and then layering technology to provide this one-stop solution that's the core growth of what we're looking at going forward.
Perfect. And let's talk about those assets, digital assets, crypto. They've been a long part of AtlasClear's thinking, but this market cycle feels a little different. So, John, there's more regulatory clarity and there's renewed institutional interest, it seems like. So, how do you view this opportunity today compared to a few years ago? And what does that say about where the digital asset sector is really headed?
Well, as I mentioned earlier, I think the digital asset sector and what we call crypto is going to become the basis upon which most financial products eventually have to move. And what's changed is the willingness of regulators to participate and the interest from institutional investors to help invest to grow that space. And so if we look back just as through our de-SPAC process, for example, we had previously been working on a de-SPAC with TradeStation, but we really felt that we couldn't move forward with it because then, under the previous administration, anything that was crypto was kind of stalled out. Now we've got a gung-ho supportive approach, and so it's kind of a once in a lifetime opportunity. Having run regulated firms for the better part of 30 years, I feel that this is an entirely different environment and that we've got a level of support that I've never seen before. And so this is the moment to strike. And so from the AtlasClear perspective, we are absolutely focused on getting into crypto in the biggest way possible this year. And I think we have to move to take advantage of however long this window lasts. I want to make sure we go through it.
Well, John, hash that out a little bit more. Talk about how you see AtlasClear is going to capitalize on these opportunities through the selective acquisitions, partnerships, maybe areas like custody, lending, settlement, all the while staying disciplined around regulation and capital. How are you going to do it?
Well, but we start with the last part again. We start with the discipline around regulation and capital. In order to live for a long time in this space, you've got to follow the rules. And that's been part of our challenge, right? Is we haven't really known the rules, but just in the last couple of months, and just yesterday, the SEC came out with more guidance, giving some clarity on things like what is the capability of custody and how does that work? What's the differences between issued tokens and what is the difference between third-party issuances for tokens and how are they treated? And so we're getting clarity on all of these things. And so we think that we are well positioned to take advantage of it. And to your first part of the question, we have many conversations ongoing with crypto exchanges, ATSs, lending parties, DATs. We have, I think, a very unique platform with respect to the fact that we have a correspondent clearing broker dealer that can, in fact, register securities for their own CUSIPs through DTC, clear them, settle them globally, and then we're shortly going to be filing for the acquisition of the Federal Reserve Bank. And so, in particular, for crypto companies that are outside of the United States and have interest in finding the right path into the United States, we represent a very unique asset in that we've got a lot of the bones of what they would all want. We've got a great management team. We understand fintech. And so we're having lots of very interesting strategic discussions as to how we're going to penetrate. And I'm optimistic we'll have some news on that front, hopefully some point in early 26.
Interesting. I think we're all learning the rules in real time, or we're all making them up either way. Craig, back to you. So there are a lot of companies chasing deals out there just to show growth. So when it comes to acquisitions, how do you decide what fits AtlasClear versus what might look interesting but might not make sense?
Appreciate the question, Anna, and that's a great question, especially as a follow-up for what John just talked about. You know, they're companies chase growth, right? The way to do that and show the street that you're growing, you make acquisitions. Whether or not that acquisition is good for you long term, still yet to be determined. Not saying that companies don't go in with the best intentions, but the reality is you want to make acquisitions, you want to grow the company, whether they're the best fit or not sure. We take a different approach. It's kind of the old Wayne Gretzky skates to where the puck's going to be, not where it is. You know, we take that perspective as what John's saying as far as crypto, digital ledger technology, digital assets. So how does that fit our makeup and where we want to be? You know, last year there was a lot of sizzle when there were a lot of these crypto treasury deals done, and there's nothing wrong with that. But, you know, when you look at them, looked at it from the perspective as what does this do for us now and what will it do for us in 6 and 12 months? And we weren't sure that we could answer that. We really couldn't. Now, if all of a sudden crypto is changed to where it can be held as net capital or tier one capital at a bank, that changes everything for us. And so, not that we're necessarily focused solely on that, but that's just give an example of deals that maybe didn't make sense for us, maybe made sense for other companies. We look at, is it accretive to revenue? Does it fit into our long-term business plan? Does it give us the architectural technology structure to fit into what we have to give us an advantage? Okay, to lead us in the markets and be a leader in the marketplace. We're a small, nimble company. Now, the balance sheet wise, that could be at a disadvantage right now, but it's also an advantage as these changes come down the pipeline. So we look for companies that can help us advance into that place that we want to be. And again, create this one-stop solution that can be at the cutting edge of crypto, digital assets, clearing and settlement, banking, you name it. It sounds pretty, pretty aggressive in a big picture for a small company, but we think we've got the foundation built. We certainly have the licensing set with Wilson Davis. We believe we'll have that with Farmer State, provided we actually get the approval on that. And then with the targeted acquisitions we're looking at right now, we think they'll be accretive. We think they'll give us a big advantage from a technology standpoint longer term in this ever-evolving marketplace. And we'll be actually properly positioned long term so that it's not a short-term bump. It's a 6, 12, 2-year, 3-year, 5-year gain for us that puts us into years to come.
Well, here's an example that you can break down for us. Talk about the planned acquisition of Commercial Bancorp of Wyoming and how does it fit into the broader vision of the vertical integration across clearing and banking, and talk about why this integration is so important for clients over the long term.
Sure. So for us, structurally, it means a lot because when you have a Fed member bank, it affords you a lot of different things. It's not an accident that last year and still now there are a lot of large technology firms that are chasing Fed member banks, especially on the crypto side. Because of the custody powers, because with a Fed member, you can get an actual Fed master account, access to the dollar. You can do all of these things that are very, very important. And as far as from an organization standpoint, allowing us to create the model and platform so that our clients can then take advantage of what we've created. So we're going to move forward here shortly. We hopefully will be filing in the very near future the initial application with the Fed for the Farmer State Bank out of Pine Bluffs. We're excited about that. That fits in again to our longer term vision, marrying it with the correspondent clearing firm. What it does for clients that will utilize our platform is right out of the gates, we'll be able to sweep deposits, overnight deposits from Wilson Davis into the bank. We'll be able to sweep a band of those in where we'll capture more net interest margin, consequently be able to possibly hand out more net interest margin on free cash balances, things like that. But also it's the extension of credit. So if you go back to a couple questions ago when I talked about credit and the extension of credit and the lack of the ability of the small and mid-sized firms to get reasonable credit for their clients, think of clients that want to buy and sell on margin. Okay, they can't get access to real good credit possibly right now. With the bank involved, we're going to be able to extend credit back out from the bank, out through Wilson Davis to the clients that want to possibly utilize margin. So there will be an impact to our actual client base that right now they may not be afforded to them. So it fits in great for clients right out of the gate with the extension of credit and the cash balances and things like that. But for us organizationally, it's a much bigger play into the idea of we're creating this one-stop solution, and I'll say it over and over and over again, with this unique licensing set of the bank and the correspondent clearing firm that, again, it's not, we're going to say impossible to replicate, but that footprint is very difficult to replicate, and very few will have it or have ventured into it. So we're excited.
I bet you are. The best of success with that venture. Thank you for that, Craig. John, I want you to close with this because as you prepare to report the December quarter, talk a little bit about the bigger picture. How should investors think about AtlasClear's position today compared to where the company was headed into 2025? And what is the big picture for AtlasClear?
Well, we are very, very excited for the filing of our Q for the calendar year end of 25. We've shown quarter after quarter improvements following the DSPAC. I'm very proud in terms of what we're going to report with respect to our expansion of stockholders' equity, which is kind of a key value metric that sometimes get lost. I'm excited to report the revenue lines We look at a recent comparable for a company that took in money called Clear Street, great competitor, great company. They took money in at 13 times the revenue, approximately, I think it was 12.67 times revenue. When we announce our revenue lines and people look at that comparable, I think they're going to see that we're grotesquely undervalued, in particular with respect to how we've so significantly increased our stockholders' equity. And that gives us a clean platform. Right? We were really laboring historically under the de-SPAC process. As a reminder, we've talked about it before. We only took $675,000 out of our trust. Originally, we had over $200 million, and then we acquired a company for more than $25 million. We had penalties attached. At the year end of 24, our fiscal year end, which is June, we had almost $54 million in debt. They will see that that has been completely reversed. They will see growing revenue streams. They will see now we have a platform. And as we've made some other announcements with respect to introducing brokers, that we are actively growing the company in the right way, the way that allows it to scale. Right? More introducing brokers is the fastest way for us to do that. So what it's done for us is it's opened up the universe of possibilities and strategic deals that we can actively consider, the size of capital that we can go after. We make no secret about the fact that we want to see both in the bank and the brokerage from over $100 million, either in net capital or tier one capital, so that we can put our balance sheet at a level with anybody that we're competing with that are much bigger than us. And so we're very excited about the release of the upcoming Q. We're excited to do the follow-on shareholder calls, and we think that as a result of the very effective management and balance sheet changes that we've had since we took the company over, we will be able to secure significantly more capital at better valuations, even than the 20 million that we took in and announced in October. We think we're going to be in great shape for 26.
Fantastic. Well, perfect way to close. We really appreciate your time today, John and Craig. Thank you for walking us through AtlasClear's progress and outlook, your time and transparency and perspective, this very interesting market we're in right now. And we'll continue this series with regular earnings calls and updates for current and future shareholders as this company executes into 2026. So for everyone watching, thank you so much, and we'll see you again very soon.
Thank you, Anna.
Thank you, Anna. Thank you.